Also have Mr. A.K. Tiwari, MD of State Bank of India, joining us to talk more about the policy. Mr. Tiwari, morning. Thank you so much for your time. As much as I'm tempted to talk to you about SBI, look at the way stock is rallying, good 7% today. And we hear marquee investors are just logging in. I'll hold myself back and put the spotlight on policy. There's a positive surprise, which is very confident RBI, very gradually upping the growth view. In fact, ahead of the street, many of the agencies have their growth view slightly lagging. But at the same time, a governor appears very cautious and steadfast on the inflation target. What did you make of today's commentary out of these two issues?
So I think the governor has been really consistent in his approach. At no point in the several policies which have come in the last months or year has he ever ventured to predict too much. He has very clearly said every single time that our aim is to control inflation. And today also he made it clear that till the inflation comes to the 4% band in a durable manner, we will continue with the stance or the policy we have. So in that sense, he also kind of put a little bit of a, if I may say, a dampener on the expectations of second quarter, third quarter, etc., etc. And I think that's a right approach because policies have to be really consistent, stable, and all market participants like a stable policy. So as long as the objective is clear, and he also mentioned that the growth, they had prioritized inflation over growth because he said inflation control, low inflation is a prerequisite for a stable and sustainable growth. However, the growth has also been good. So in that sense, it's going well. But it's the role of the governor to actually always caution the market that yes, things are good, but keep watch out, and we will keep watching. And if warranted, we will take action. So that's the sense I got.
And the other thing, this policy, everybody was watching out for mention of or some kind of either short-term or near-term liquidity measures, because that appears to be becoming a bit of an irritant for bankers, for corporates. On the one hand, deposit growth is actually lagging credit growth, and deposit rates have to be kept high to compromise either on the margin front, on the growth front. In fact, a lot of money is also seem to be coming out of FDs going to financialization. How this bit of near-term issue for the industry?
Yes, this is an issue because you rightly mentioned that there are alternates available in terms of mutual funds and equity markets where a lot of money from the retail depositors is going because the markets are doing well, they are getting good returns. And at the same time, the loan growth is outpacing the deposit growth for last several quarters now, almost close to a year and a half. And in many cases, the CD ratios of some of the banks are also very high, upwards of 100 or close to 100%. So in that sense, to support the loan growth, clearly the deposits, which have been a major source of loan growth, loan financing for the banks, there is a pressure on the deposit rates. And that's why we see that the deposit rates have been growing. And maybe in the near future also, depending on each bank's own asset liability management, they could still go further if the loan growth continues like this. So that's one side of the story. And of course, there are banks who are forced to do short-term borrowing also because sometimes for mismatches. And those rates have also been volatile at the shorter end. So therefore, while no special dispensation has been given on liquidity, he did mention that one, that they will use all tools as appropriate for ensuring that the liquidity is stable. And secondly, also mentioned that this is the last quarter and government spending generally picks up in the last quarter to account for various budgeted items which are there. And that's our expectation also, that as the government spending increases in the last quarter, the liquidity will get some support at the shorter end as well.
Fair point. So it's just a matter of time. This industry forces may actually come back and address that issue on its own probably. But banks are kind of slipping right now in trade, and there was some heightened expectation, something on liquidity may come. Just one last word I want your view on, Mr. Tiwari. The additional measures, this policy announcement, far more interesting than the actual policy, especially announcement, a review required for the structure of the way online trading platforms are operating. That one, and also the need for enhanced transparency on SME loans. What are your thoughts on these two? Why were this on the regulator's radar? Are there some practices out there which require much more transparent and review?
So electronic trading platform, I don't have any comments
Oh,
because
sure.
clearly he mentioned the last review was in 2018. So there could be some improvements which the RBI must have felt. On the charges front, I think there are two facets to this. One is that it is being extended to all products in MSME and retail. So that is one, which is okay. And the second part is, that's my sense, because I have to still read the full details, that we do disclose interest rate plus all these charges, including processing charge, upfront charge, documentation, everything separately. And in fact, in our bank, we have created what is called a unified charge, includes all charges, so that the borrower has a clear idea that this is my final charge. And now probably what he wants for retail and the MSME borrowers is that this charge plus interest rate on an annualized basis, what does it look like, so that it is comparable across different banks? Because for our retail customers, sometimes hard to understand what my final cost is going to be. So that's my sense. But I'll read. But I think one other announcement which is very significant, and which people have not realized, is the fact about the additional factors of authentication framework. Because as you mentioned, the SMS-based OTP is the predominant mode, and we have had a lot of instances where this has been compromised by various fraudsters. So I think the newer alternatives which have been emerging, I think that's a very, very important thing. And to actually stay ahead of the fraudsters, I think we need to shift to some of the other alternates which I was mentioning. So that is also interesting in my view.
Mr. Tiwari, in fact, rising fraud risk, he was clearly mentioning it on Aadhaar link payment, which is very important to be reviewed. Thank you very much for your time. We will definitely put the spotlight and analyze these important cues also which you given via your answers. Thank you so much for your time this morning.